Good morning, good afternoon, or good evening. No matter the time of day or where you're joining us from, we sure thank you for being here. I'm your host, Steve Henning, and this is the CVB Network podcast, where we cover a variety of topics, but all are related to the work truck, van, and trailer ecosystem. Today, I've got two terrific guests. I'm really excited about this one. So we have Aaron Johnson, the Chief Executive Officer from Work Truck Solutions, and Kathryn Schifferle, the Founder and Chief Vision Officer, also from Work Truck Solutions. Aaron, Kathryn, thanks for being here.
Thanks, Steve. Appreciate it.
As I said, I'm really excited you're here. So let me maybe just lay a little bit of groundwork, give a bit of context for what we're going to talk about today, and then we'll jump right in. So if you've ever heard this saying, this hopefully sounds familiar to you, and it's this: money makes the world go round. There's another saying that may be a little bit different. You may not have heard this before. You may have heard this before, but it's really applicable to what we're going to talk about today. And it's this: data makes the world go round. So as you might guess, what we're going to talk about a little bit is data. And Work Truck Solutions has just released their second quarter market analysis. So we're going to talk through a little bit of that, some of the takeaways, kind of what Aaron and Kathryn saw as they looked at the data and put that report together, maybe what the market looks like going forward, and then perhaps a little bit, if we can, what they think the rest of 2026 and maybe even into next year might look like. One final caveat, and it's this, and I did read the press release. I read this in the press release, and it said this: it's a reminder that one quarter does not mean a trend. While things may be happening in Q2, that doesn't necessarily mean that's the trend for the year, but it might. So we'll dive into that a little bit more as well. So Aaron, Kathryn, does that sound fair? Does that sound like what we should cover here?
No, it sounds good, Steve. Looking forward to it.
Okay. So let's start, I guess, big picture, if you will. As you looked at the data, was there anything either surprising? You saw that some of the metrics and went, wow, didn't expect that, or gosh, this was kind of nice to see this. This bodes pretty well for what's coming. Anything like that jumped out to you?
Yeah, I'll kick it off, and then Kathryn obviously jump in. So, I think, when you think about 2026 so far and all the dynamics that have been going on that affect, each of us, not just in the commercial vehicle space, whether that be the notion of, some changes at the Fed, so people may start thinking about what's going to happen with interest rates, that then kind of balanced based on inflation changing kind of direction a little bit based on obviously outside influences and the kind of on again, off again challenges on what's going to happen with oil supplies, oil pricing, those sorts of things. You've seen those fluctuate tremendously over, really the last few months. And again, and some of that gets, quarter one, you started to kind of see a little bit of that. But obviously it's been kind of back and forth. So with all that kind of going on, I was curious to see kind of how the market would react and the types of changes that would occur. And some of the things that happened, start to really tie those things together. One is, when you look at things like on the used side, the mileage starting to go up and therefore prices going a little bit down, you start seeing places where, people have held on to things longer than they normally would, maybe looking at some of the, kind of trying to predict when it might be more advantageous for them to make that transition. But in quarter two, I think that's what you started seeing is that more activity on the new side as we were needing to cycle those things out. So I think that we had a little bit of companies and fleets holding on to inventory maybe longer than they would historically. But then as that the dynamics I just described continued, they had to make some decisions. And so I think what we saw was, with the kind of influx of older used inventory, seeing those prices drop a little bit, new was able to stay relatively flat, with some variation depending on class. And I think that what you saw as people started to make transition and therefore things like days to turn and other aspects on the new side started to be favorable in Q2. And I think a lot of it has to do with kind of accepting some of the new kind of dynamics that are in the market as a whole.
I'll agree with Aaron, and probably add in that, we're looking at Q1 to and over last year, but when you step back and think about what's happened over the last few years, prices have gone up. and they've gone up pretty significantly. So it makes a lot of sense that there would be holding on and, keeping vehicles longer. Maybe the cost of investing in keeping them on the road was better than having to go out and buy new ones. So I agree with everything that Aaron said. I think it's kind of funny, though, when you look at this space, how stable it really is. So there's little ups and downs, but in general, we find though that the cycles go up and down that then they are consistent with the fact that the commercial space needs to keep buying vehicles no matter what else is going on, whether the gas rates go up, whether there's, a threat of tariffs affecting everything. All of that goes on, but so does business.
Yeah, and that's what I think part of what Kathryn's describing, I think goes right into this, because that you can only hold out, for so long. Because in the end, these are organizations that need to keep their businesses running. And if you look at some of the dynamics around whether it be data center builds or other kind of drivers of construction, the type of things where we think about bringing looking at kind of rebuilding some manufacturing capability within in the country, those sorts of things. Those are all then start driving demand on the commercial side, and that certainly includes the vehicles. And so as that continues, and whether it be private or public spending, those types of things continue to create opportunity for the customers, for the end users of what the commercial vehicle industry actually creates. And so again, we can make short-term decisions around some of these trade-offs, but in the end, we're going to continue to have trucks on the road.
Definitely agree with that. Is it fair to say that maybe what we saw in Q2 then is some of that pent-up demand starting to break loose a little bit? As you said, as data centers, private, federal spending doesn't really matter. You need work trucks for those things. Was there some pent-up demand that finally started to break away or break free a little bit, and that's part of what you saw in Q2?
That's my view. I think it's both. There is some expansion, of course, based on a lot of the activity that's occurring and the spending that's happening, that results in construction of various types and maintenance and other types of things. But there is some portion of that I would expect is from this pent-up demand. And I think as we look into, if you look at some of the models looking into Q3, Q4, I think that will continue. I think we'll start seeing just not a huge, but a small kind of acceleration of demand, similar to what we saw in Q2 over Q1.
Yeah. In fact, I wanted to go back to something you said. You talked a little bit about commercial vehicles being pretty stable. If we position that against the retail market, i.e. business to consumer, how would you position that, or what might you say to dealers that are, have seen some of that? Hey, that's the interest rate challenges. It's, we read pretty regularly, gosh, a new car these days for a consumer is $700 to $800 a month. There's pressures on those consumers for that, but the commercial space is a little bit different in terms of you need it. What would you say to dealers that are also seeing some of that, or maybe saw that over the, especially first part of the year on the consumer side compared to commercial?
We have to, this, Steve, I am 150% on what a great opportunity commercial is for a dealership. And, what you're talking about is just one aspect of it, that the consumer is going to be up and down. You're going to be trying to catch whatever that wave is. That commercial is steady, and there are small adjustments. There are opportunities if you see them. But what's even greater is when I talk to dealers and ask them who are in the commercial space what the commercial business does for the overall dealership, I'm now hearing that many of them, it's the highest profit margin in the dealership, and up to including over 50% of their ongoing revenue and profits. So I think it's either a dealer should be looking at it, or they should be looking at how to grow it better.
One other parallel that you might think about, Steve, is that when you think about on the retail side, and you have the dynamic in the market today where a certain group of buyers are able to afford the vehicles at the higher prices, and some people get potentially priced out of the market. And so dealers try to service those across the board. And so they look at different types of how I would acquire used vehicles of quality for folks that today, can't get into a new vehicle. The same thing is true when you're dealing with businesses. So even in the circumstance where we see the higher mileage used commercial vehicles, in order for a dealership really to service, their community fully, whether they be, large businesses or smaller businesses that maybe at this point, from a spending standpoint, need to keep things a little bit lower. Leveraging these types of used vehicles is important. So making sure that they have good sources for used inventory, making sure that they're open to trade, that they have a plan around how to value those effectively, not just the chassis, but the complete vehicle, the upfit, all the pieces that come with a complicated vehicle that's used for commercial. So as dealerships look at where they're going to serve their communities, it's certainly the businesses at the higher end that are buying new vehicles fully upfit versus making the space for even some of these higher mileage used vehicles for businesses that want to keep moving forward and continue to expand and maybe do that in small incremental pieces.
And I would point out that these are the businesses that have a direct need for service, and that if the dealership recognizes that providing service for an uptime philosophy where they're focused on helping that business be up all the time, then the kinds of opportunity winnings that there is for that at the dealership are great as well. Because, a business isn't going to wait around for a coupon for a oil change. And if you're doing, mobile service is a big thing right now. And if you can coordinate that on a weekend or an evening or something around helping a business that has multiple vehicles, then all of a sudden you're starting to really find these pots of opportunity and revenue.
That's right. And to Kathryn's point, that also now puts the dealership in a position of really being a business partner to these small businesses. And so then you'll be in a position where you can help the individual customer understand the trade-off of ongoing maintenance cost, ongoing fuel costs, et cetera, relative to purchasing a different vehicle. And so to be in that position, that's when all of a sudden you're able to come alongside these businesses and help them succeed, be much more kind of a part of their success, even more so than just delivering a specific vehicle at a specific time.
Boy, yeah. So a lot of what I heard both of you say was value, value, value. It's really important if you're a dealership to help those businesses and offer value to them. So that's kind of a I guess, good setup. I appreciate that to one of my questions. And Aaron, you mentioned this, I think, a little bit earlier, and I know I read it in the press release as well. It talked about the used vehicles that are in market right now are a lot, generally have higher mileage than they did, let's say, in Q1 and so forth. Any advice for dealerships as they have this used inventory? Are there specific strategies or tactics that they might employ to ensure that they're really showing and demonstrating the value to those potential buyers for those used vehicles compared to somebody who might be looking new? It's a bit of a different animal, I think.
It is, but it kind of comes along. Really, a lot of organizations that sell to businesses, one of the most important things is that you understand the business of your customer, right? And so, to the degree that you can get a sense for the type. So, for example, if I'm have a particular used vehicle and I'm selling it to a landscaper, if I know more about the geography of that land, where that landscaper operates, are they doing 100-mile drives? Are they with it? Is a particular crew staying within a 10-mile radius? Those sorts of things then can help us consult and provide them kind of the right option on the vehicle. So, and then, we can also coordinate with them on ensuring that we get our routine maintenance pre-scheduled, so that we're not kind of doing this exception-based maintenance, so that I can help them kind of stay on the road. And I can tailor, if you will, the kind of the vehicle choice to the specific need that they have. Again, not just what they're carrying, but how far are they carrying it? How many people are they need to be in the vehicle? Those sorts of things. If I know more about that business, I can put them in a vehicle that I think matches their financial need as well.
And what that really does is it takes that value of what that vehicle how that vehicle was originally built. And it carries that through the remarketing to the second customer in a substantially higher value. We've done research, not, of course, it wasn't in this particular release, but we've presented at CAR and a few other conferences on the comparative difference between sending a commercial vehicle to auction compared to selling it, where you're targeting the buyer, like Aaron was talking about. The great news is that commercial businesses are coded. SIC codes tell you what type of a business they are, which we have data that shows what kinds of vehicles they can be targeted for. That doesn't happen on the retail side very easily. There's demographics maybe, but it's not like you can just say, well, let's send this vehicle to these 30 businesses because we know they're, 100 times more likely to buy it. It's pretty dramatically exciting for marketing purposes.
As a marketer at heart, I would agree with that. I love hearing that. Okay, so we've covered new vehicles a bit. We've covered used vehicles a bit. Let's talk maybe electrification for just a minute. BEVs, if you will. Anything that you saw in the data from Q2 or even comparing to last year, outside of we'll ignore maybe some of the federal benefits that went away, et cetera. But anything you saw in the data that either changed your outlook for those types of vehicles? And, I guess maybe the other question that goes along with that is, are there specific businesses that you see right now that you would say, wow, these types of vehicles are the perfect fit for that specific type of business?
Yeah, I think, Steve, what you're starting to see, and this has been true for a while in commercial, is that in the end, the business knows what they need, right? They're looking for a specific tool for a specific job, and they want to do it, as efficiently and effectively as possible. And so that's, I think, the driver of alternate fuels going, today and going forward. And, some of that was influenced based on policy, whether that be incentives or other things where maybe, that those things tilted the scales a little bit, depending. But in the end, businesses are still making the decision based on their business need. And so when you think about, there are good matches, right? If you think about last mile delivery, that seems like a real, especially for light cargo, that has been, a successful area. If you have a business that has a central location for vehicles to be stored off hours, those sorts of things where charging and et cetera can be addressed. If you don't have, if you have predictable mileage, in a particular time period, those are the areas where alternate fuels can be looked at. So I think I think that will continue. I think you're going to have a circumstance where the business need itself and the value of that, if you will, tool that they're acquiring to perform the functions of the business in order for them to serve their customers, that'll be the driver. And I think that's what you're starting to see. That's what you're seeing.
I think too, we did note that in our data, there was an increase in the price of electric vehicles. Mm-hmm. And I think that what we did see some additional medium duty vehicles coming in. Prior, it was a lot of light duty, like Aaron said, light vans and stuff. And so that, to me, I don't think it's that the vehicles themselves have been increasing in price. I think it's that now there's a certain set of medium duty vehicles that by nature would be more expensive that are market ready.
So the mix of it is what you're seeing, Kathryn.
Yeah.
As we wrap this up, maybe I'll ask a couple of final questions of both of you, and that is, were there any stats, data, metrics, coming out of Q2 that you predict these will likely continue, and that may become a trend as we go forward throughout the rest of the year? And then conversely, anything you saw in Q2 or even Q1 into Q2 that you would predict, this probably won't carry us through the rest of the year, or it might shift. Anything like that come to mind?
So I think, between both the data that we've provided and then discussions with other in the industry, I think the increase in volume will continue while prices remain. I don't think we're going to see huge changes there. But I think we'll still continue to see growth in the new volume over the next couple quarters. Again, I think it's for the same factors that we just discussed. I don't think that the used market will continue to climb in terms of mileage. I think that will level off. I think you're now seeing kind of we've reached where those cycle times are going to become more routine, less, because I think that there's some of that's now been kind of baked in, and so I think you'll see that probably won't drop. It'll probably remain at that higher level, but I don't think that's going to climb. And so I think that will level off. The price of used will likely level off as a result, and but I think we'll still see additional new units in the coming quarters.
I'm sorry. I have a funny, twisted sense of humor, Steve. 5%. That's what I'm saying.
Just 5% overall. Apply it to whatever you want. Okay.
What I mean is that, steady, ready growth, and 3 to 5% each of the next couple of quarters. I do think that one of the things that I'm hoping that we achieve over the next couple of quarters is this elevation of configuration maximization for used vehicles. And I think that the more that we can help dealers get that increased value out of it and butter at it, the more they'll be able to create a better cycle, because, that's what we want. We want Aaron described it earlier, which is there's companies that need to cycle. They get a benefit out of doing it. They have better performance. They have better driver comfort. There's all these things, and if the prices are held at a certain place and they can cycle, and their maintenance is offset by the cost of replacing, that's what makes the ROI work. So if that can happen because the value of what they're letting go supports that, then that'll support new, smaller companies entering the market and growing. And that's what we want to see. That's what makes the work truck industry, the commercial vehicle industry, the backbone of the U.S. economy, and what is actually happening in the economy. So that's my take on it.
Okay. Well, I appreciate that. And you've stated it publicly now. So I guess we'll check back later and see your prediction, see where you land. But I would suspect you seem to have your pulse on this pretty well. I would suspect your prediction's fairly accurate. So I also know that both of your calendars are just incredibly jam-packed. So I wanted to say thank you for spending a little bit of time today talking about the data, and also on behalf of the entire industry, thank you for doing these quarterly reports. I know you've been doing them for several years now. It really helps, everybody, I think, across the space, just to get a sense of, okay, where are we? What do the trends look like? That, hopefully people can use that as they plan for their business, dealership, upfitter, OEM, whoever they might be. So thank you for that. And for anybody that's interested and wants to read the full press release, you can either check out the link at the bottom of the screen here on this podcast. I believe it will also be on the Work Truck Solutions website, which is worktrucksolutions.com. The thing we didn't get to talk about, but I will mention it here, there's also a specific segment highlight in that press release. So if anybody's interested, you can check that out. If you're, kind of a data geek or a data nerd and you want to read a little bit more, check that out as well. And then finally, please, subscribe to the CVB network for more podcasts and updates from across the industry. And again, Kathryn, Aaron, thank you very much for spending time with us today.
Let's not forget to mention that they should put on their calendar November 4th and 5th.
What's November 4th and 5th, Kathryn?
The CVB Summit.
Fantastic. You heard it here first. Put that on your calendar, please. Thanks so much.
All right. Thanks, Steve.